In this video, I'm going to show you how to build your equity safely at a rate better than 30% per year. Risk management is the most important key. Risk management is vital. Unless you own a crystal ball, when you buy a stock, your probability of it rising in price is only 50-50. Similarly, when you buy an at-the-money option spread, the probability is only 50%. However, the probability of having a winning trade changes as the selected strikes are moved from in the money to out of the money. A successful trader is always concerned about risk and reward, with the primary concern being risk. One major factor in risk management is the number of consecutive losses. A successful trader always wants to determine how many losses in a row they can suffer before their overall account drawdown loss exceeds what they can tolerate. It's important to consider the possibility of multiple consecutive losses and the effect those losses will have on their account. This table exhibits trading the probability of suffering consecutive losses with different probabilities of success. My trading model identifies the probability of a successful trade before a trade is put on. It should be clear that the higher the trade probability, the greater the probability of success. In addition to trade probability, it is also necessary to consider how much of your equity is at risk when a trade is placed. If we risk 20% of our equity on trades with a 50-50 probability, our account would almost be depleted after only 32 trades. If the probability was raised to 66.67%, we'd be almost depleted after only 243 trades. The proportion of your equity at risk on a trade matters. If the trade size was limited to 5% and the trade probability was 66.67%, the likelihood of exhausting your funds would drop to 1 in 3.49 billion. Managing risk may seem confusing. It seems there are so many factors to consider. By simply focusing on the probability, your likelihood of being a successful trader will be greatly improved. Risk is best managed by trading small and trading frequently with high probability options. I recommend spending at most 5% of your assets on any given trade. It would be better to trade even smaller. This rule will eliminate your vulnerability to black swans in the market. Each month, I offer guidance on several high probability option trades: when to open, when to close, when and what to roll. Generally, there are two pair trades that I call counter condor. It is a hedging type of strategy based on trading inversely correlated leveraged ETF options. Counter condor is designed to produce consistent profits month after month. All investments have risk, but counter condor is designed to reduce exposure to losses while still making steady profits. Since March 2012, 87.5% of its trades have been winners. Trading only 5% of the portfolio equity, its compound rate of return is over 16%. With 2 of these trades per month, your equity should grow at more than double the rate. This chart shows the growth of equity based on a single trade. I also offer guidance on several other characteristically high probability trades, including the naked put, the back ratio spread, and the jade lizards. Each of these trades is a high probability bullish trade. However, you should only put on these trades on stocks you are willing to own, because if assigned, you will end up owning the stock. The only risk with these trades is being forced to buy the stock, but at a reduced price. There are a number of defensive strategies when threatened in this way. One choice is to close the trade. This may not result in a loss if the price is above the break-even point. A second is to allow being assigned, and then to decide what to do while owning the stock. The stock could be sold, or the position can be converted to a covered call, further reducing the stock's price. Generally, I prefer to roll a position which lowers the break-even point and increases the overall credit. This plan will give you the opportunity to trade frequently and trade small with high probability options. This is the key to becoming a successful trader. Thank you for watching this video. Email me, Dr. J, at theoptionshepherd.com for information about my guided help building your equity with these unique conservative strategies. Live trading with this strategy from March 2012 to August 2013 had better than 95% winning trades. You too can enjoy this rate of trading success.